Welcome to another Tax Talker. Thanks for clicking. I really appreciate it. Today's video covers everything you need to know about the tax law changes from the One Big Beautiful Bill Individual Edition. We'll do a separate video for the businesses out there. Be sure to hit that subscribe button so you don't miss it. I've already made a few videos on the big headline items that you can check out, but there's a lot of small things in this bill too. Any one of them, not a big deal. But if you're affected by 3 or 4 of them, you're probably looking at a $1,000 increase to your refund when you file your 2025 tax return. Let's get into it. First up, we have the tax brackets themselves. The headline here, they did not change. Had no bill been passed, they would have reverted to pre-2018 levels. You can see on your screen now the change in tax rates when they passed the Tax Cuts and Jobs Act in 2017, effective for 2018. Nearly across the board, tax rates went down. All the One Big Beautiful Bill did was extend these rates, and they made them permanent now. There is no future sunset. It would take congressional action to change them. You can see what the rates were in 24. The rates on your screen for 25, those were already out. The bill did not affect them. All you see is inflation adjustments to the various income brackets, and you'd see that again in 26 and so on. Standard deduction, remember with the Tax Cuts and Jobs Act in 2017, they doubled it. And that would have sunset after 2025. It would have gone back to what it was in 2017 with inflation adjustments. It would basically be half of what you see on your screen in 2024. The bill also juiced the standard deduction in 25 a little further. You can see what it would have been. It was already posted. And now you can see on your right the final amounts with the passage of the bill. That's more than a $1,000 increase over 24 for single taxpayers and over $2,000 for a married filing joint. Child tax credit, again, would have gone back to 2017. I hope you're seeing a theme here. It would have been $1,000. It stays at its increased amount. In fact, it got a little bump. It goes to $2,200 for the non-refundable credit. That means you have to have tax liability to offset it. And that is now inflation adjusted each year. So we will see increases going forward. There's no change to the refundable portion, $1,400, but that will also start to get inflation adjustments as we move into new tax years. Again, no future sunset coming. One other change, important to note, you need to have a Social Security number. Both child and adult need to have a Social Security number to qualify for the credit. Child Independent Care Credit, this is a confusing credit as is. The headline is that nothing really changed. In fact, they really didn't make much change in 2017 to this credit. It's still up to $3,000 for one child, up to $6,000 for 2 or more children. These have very steep income phase outs. It just doesn't phase out entirely. And none of that has changed. There's a bump from 35% to 50% for qualifying expenses. That makes it a little easier at the low incomes to qualify for the credit. The change that will affect the most number of people, you can see on the second item there, moderate income families are not getting phased out to the lowest portion of the credit. They already were qualifying before. Now they're going to qualify for a slightly higher portion of the credit, depending where you are on that income spectrum. It'll look like a couple $100 for one kid, maybe $800 for 2 or more kids. You can also see in 2026 the increase to dependent care benefits from your employer. That's tax-free dollars. It used to be $5,000. It's going to bump up to $7,500, but not until 2026. These next 4 items I already did a separate video on, so we're going to move quickly here, but there'll be plenty of information on screen if you missed it. No tax on tips, up to $25,000 per return, and be careful with those income phase outs, starting at $150,000 single, $300,000 married. No tax on overtime, $12,500 single, up to $25,000 for a married filing joint return. Same income phase outs apply. The new vehicle interest deduction. This is up to $10,000 in interest. You do not need to itemize in order to get it. It is an above the line deduction. Pay attention to the income phase outs and vehicle requirements. No tax on Social Security. That was the campaign promise. It really doesn't actually have to do with Social Security. This is a benefit to taxpayers who will be 65 years or older. Starting in 2025, they'll get a $6,000, or if it's 2 senior citizens, both at 65, they'd get $12,000. All 4 of these items, the tips, overtime, interest, Social Security, all 25 through 2028 items, 4 tax years affected. State and local tax deduction. salt. This was capped at $10,000 of expenses in the 2017 Act, effective for 2018 through 2025. This bill, starting in 2025, allows taxpayers to deduct up to $40,000 of state and local taxes. That is mainly, big drivers here, property taxes plus income taxes. That $40,000 is regardless of single or married filing joint. You also have a phase-out range starting at $500,000 of income. This provision goes from 25 through 2029. Charitable deductions. We actually have a good news, bad news thing here. If you do not itemize, above the line deductions are back. $1,000 for a single, or up to $2,000 for a joint filing return. This is essentially being paid for by your itemizers. They've introduced a new floor based on your AGI. You won't receive a charitable deduction on the first 0.5% of your income. You can see an example there in the details. We have a pretty much unrelated list of items here that we'll fire through quickly. Gambling losses, limited to 90% of gambling income. As was before, you have to be able to itemize in order to benefit from any gambling losses. AMT rules largely stay in place. Most people are not going to be affected by AMT. That's still going to be true. The only thing that will affect a few taxpayers at the high incomes is you're going to have a steeper phase out on the AMT exemption. QBI deduction. There was talk, there was even a version in the House that was going to change it. Nothing changed with QBI other than a little bit of change to the phase out ranges on SSTVs. But the headline here, 20% deduction on qualified business income, still in place. SSTB rules still apply. The estate and gift tax amount, that would have sunset back to $7 million. Now they've actually bumped it up. It goes to $15 million for tax year effective 2025 and still indexed for inflation and no sunset coming. Again, that means would take an act of Congress to change it. Itemized deduction cap changed how this will work at the high income levels. At the highest income tax bracket, if you're in the 37% tax bracket, your total itemized deductions are going to get multiplied by 35%, and it's only the 35% amount that you're going to be able to include on your return. A little tweak to 529 distributions. You can use that money for credentialing, such as paying for your own CPA exam. Those are now qualified expenses and you can take a tax-free distribution. Finally, a very intriguing item for you schools and nonprofits out there, $1,700 credit available starting in 2027 for donations to 501c3s that have a scholarship fund. Energy credits are a big loser in this bill. The EV credits are stripped away in 2025 and going forward. I think a takeaway here is if you're considering an energy improvement, do it sooner rather than later. Always double check with the sales rep. If they're telling you something qualifies, double check with them and say, is this the latest based on the recent tax law change? The new so-called Trump accounts. This is basically a type of IRA for kids. Starting in 2025, children born will get $1,000 from the government into this account. It's also notable that employers can contribute to these funds as well, tax-free. It'll actually be a year from now when this actually rolls out and you start seeing these accounts and eligible contributions made. That is a wrap on tax law changes for individuals from the One Big Beautiful Bill. If you spotted something I missed, leave a comment. Also love to get a comment on any of your tax questions. Coming up next is our business edition of this video. Also, I have in the works a video helping you calculate your tax savings from no tax on tips and no tax on overtime. So hit the subscribe button for that. Thanks for watching, everyone. We'll see you in the next one.